Well, good afternoon, everybody, and welcome to the end of week market review for Friday, March 1st, 2013. We're going to be covering a few things. We're going to be starting off by taking a look at market news. Now, this is going to include the markets as well as some indices and commodities. We're then going to go ahead and take a look at some economic reports. We'll be looking at daily and weekly charts for both the S&P 500 and the Toronto Stock Exchange. While we do this, we'll be looking at the charts on a short term and long term. We'll then go ahead and take a look at the volatility index review and then finish things up by taking a look at one of the picks that we had throughout the week that performed well. Alright, so we can see that the markets did end up slightly from last week. We can see that the Dow Jones is up 0.64%, with the S&P 500 up about 0.17%. Now we had a little bit of concern coming out of Italy, but we ended up with some strong economic data and some positive stuff coming from Bernanke and the Federal Reserve. You could see, though, that oil is down 2.68% from last week. This now puts it to $90.87 per barrel. We've also got silver down. It is down 0.38%. This puts it to $28.58 per ounce. Gold is also down. We can see that it is down 0.31% from last week's close. This puts it to $1,575.30 per ounce. And finally, if you look at the US Canadian pair, you can see that it did go up. It is up 0.45% from last week's close. While looking at the economic reports, we could see the most significant report that came out was on February 28th, where we had an expected forecast of 365 jobless reports. We ended coming in with 344,000. Because of a lower than expected jobless reports, we ended up having a little bit more of a positive upbeat near the end of the week. Right now we're looking at the S&P 500 on the daily chart, and we've got about 6 months worth of data here. You can see that we ended up breaking down below a tight trading range that was put in place throughout January and most of February. This breakout happened last week. This week we came down and reached a fairly low, but we didn't quite make it down to support around 1475. We did, however, work ourselves back up, reaching a high of around 1525 yesterday. We can see that the MACD did dip into a declining bearish state, but it's now worked itself back up into a rising bullish market condition, with the black line almost crossed through the blue line. Here we are looking at the S&P 500 on a weekly chart. You're going to notice that we're looking at about a year's worth of data. You can see that we ended up having a pretty flat week compared to the week prior to. All in all, though, it was great to see that we had that increase. If you look at the S&P 500 on that same weekly chart, this time we've zoomed out and we're looking at 5 years worth of data. By going out this far, we can take a look and see where we are right now and see where the S&P 500 has been historically. We can see that the S&P 500 is continuing to enjoy some all-time highs. We have not seen the S&P 500 this high in the last 5 years. So although we've had a little bit of a pullback on the week, we're still doing very good on the weekly chart. Right now we're looking at the TSX on a daily chart. Again, we've gone to 6 months of data. We can see that it's been trading very strictly between the upper and lower trend lines throughout the month of February. Yesterday we did have a gap up where it broke up above those trendline resistance levels, but it's gone back down and it is now testing support at that same mark. This is around 12,770. Now, just like the S&P 500, we did see that the TSX worked itself into a declining bearish market condition. However, with the 2 positive days that we had, we were able to push that MACD back up into a rising bullish market condition. And in fact, we even have it with the black line over top of the blue line, which just makes things a little bit better. If you look at the TSX on a weekly chart, you're going to notice that we've been dancing around some overhead resistance that was put in place back at last February. So this is definitely a significant level of resistance around 12,750. We can expect to see that if we have another positive week, we'll be pushing ourselves up even higher. Looking at the TSX on a 5-year chart though, we can see that we're definitely not looking nearly as strong as we were with the S&P 500. You can see that there's several cycle highs that we still need to come up and cross over before we're in a 5-year high. If we can manage to work ourselves up above 15,000, it'll be much more doable. Obviously though, this is very relative, because if we end up waiting several months, this large hump over here from 2008 will be gone, and then we'd be looking at some cycle highs around 13,700. So it really is a matter of how you look at it and when you're looking at it. If you look at the volatility index, you're going to see that it jumped around quite violently throughout the week. It even got up to a high of 1950 before coming back down, testing 14 and settling here at 1536. All in all though, it is still up 8.40% from last week. So we've definitely had an increase in that volatility indicator, though we're not too concerned because we know that it can healthily trade between 14 and 16. When we did need to be concerned was when it worked itself back up above 18. Although the week was fairly slow and there weren't very many picks to choose from, we did have some great picks coming out from our ITL customers. One of the ones that really stood out to us was a pick that we chose on February 25th, 2013. That pick, QID, was an inverse ETF for the S&P 500. That came out when the markets were really starting to look negative. Now, although the markets did end up turning around and becoming positive, we were able to quickly get in and make our expected 1.20% profit targets before seeing the markets work themselves back down again. If you have any questions about those ETF picks that we had, or you'd like more information on any of our products, feel free to email us to training@idealtradinglifestyle.com. You could also reach us toll free at 1-888-942-0266. Just make sure that you're dialing extension number 5. And as always, make sure that if you're ever trading or exposing yourselves to the market, that you're doing so with caution. Any trading decisions that you make are your own, so always make sure that you're falling back on the predetermined exit prices that you decided before getting into your trade. This has been the end of week market review for Friday, March 1st, 2013. Ciao for now.